Hello, my name is Jeffrey Smith. I'm the Chief Instructor here at DTI. I want to talk to you about trading the Mini-Dow futures. Of course, there is risk in trading. Past performance is not indicative of future results, and I'll admit I'm not the best typist in the world, so if you do see a typo, please let me know. We'll kind of get things corrected from there. Kind of starting off, the Dow futures is basically a derivative of the Dow 30 index. It used to be called the Dow Industrial Average in the days of yore. Basically, you added up the stock price between the 30 stocks, divided it by 30, had an average price. Of course, companies got bigger. They did a lot of stock splits, things of that sort. So all of a sudden, you have a weighted index because some companies now are much bigger than others, and it wasn't really fair to say that if GE moves $1, then the index should move 1 point, and if Bed Bath & Beyond moved up $1, it should move the index 1 point either. GE's a whole lot bigger than Bed Bath & Beyond, so they decided to weight the stocks in there, and now we have what we call an index. Now they call it the Dow 30 index. Of course, it still consists of 30 stocks. Those 30 stocks used to be listed on the New York Stock Exchange. Now they kind of got rid of some and put others in their place. Now you've got 3 of them. Cisco, Intel, and Microsoft are traded on the NASDAQ exchange, where the other ones are traded on the New York Stock Exchange. So you really have 27 stocks that are on the New York and 3 on the NASDAQ. When we start looking at the Dow, since we really can't trade an index, it's very, very difficult to try and divide up the number of shares you would need, or multiply out, maybe I should say, to kind of balance things out to actually control the actual index itself. You can't buy 6.3 shares of something. You can't buy 2.1 shares of something. You can only buy 2 or 3 shares, or 6 or 7 shares. So it's very, very difficult to divide that out. But we can trade the derivatives of the Dow, and one of them, of course, is the diamond, the ETF, exchange traded fund, the spiders, if you will, and that allows you actually to control the index. But you'll also notice that its value is different actually than the cash index itself, just because, well, stocks get dividends and interest and things of that sort, so you'll have a little different value in the diamond than you will the actual Dow. Of course, there are options. You can do options on the diamond. You can actually do options on the index itself. You can do options on several different things. So those are derivatives as well. And of course, then you have the futures market, which is also a representation of the actual Dow when you start looking at the Dow futures. When we look at the Mini-Dow itself, of course, it is traded at the CME on a computer system called Globex. The Globex stands for Global Exchange. You'll also find other index futures there, like the Mini S&P. You'll see the Mini NASDAQ there as well. And of course, that's where your current crude oil, gold, silvers, currency futures, the cattle, meats, I'll say, and a lot of the grains are traded on Globex nowadays. They used to be over at the CBOT, but of course the CME bought out the CBOT, and now they put everything on the Globex mainframe computer system. The Mini-Dow trades in 1 point increments, and it's worth $5 per point. So if you look at the big Dow futures, it's worth twice that. And of course, they have even a bigger Dow, which is worth $25 a point, but we're going to be just focusing on the Mini-Dow here. It trades from 3:30 in the afternoon Central Time up to 3:15 p.m. Central Time the next day. So it's virtually a 24-hour market, not quite 24 hours. On Sundays and on holidays, it actually opens up at 5 o'clock in the afternoon. The holidays, meaning Memorial Day, 4th of July, Labor Day, Thanksgiving Day, those holidays, the global markets are still open and trading. Just because we here in the United States decide to take a holiday doesn't mean the rest of the world does. So on those holidays, it'll actually open up at 5 o'clock in the evening and then trade until 3:15 the next day, unless there's actually a holiday the next day as well. Then it will actually shut down at 10:30 in the morning and then open back up at 5 o'clock that night. So just kind of depends on how the holiday lies, what time they'll open and close. When we start looking at a 24-hour market, we actually have to divide it up into 4 separate time segments. These 4 separate time segments deals with the Asian markets, the European markets, our morning session here in the United States, and of course the afternoon session. The reason why we divide these up this way is because we want to see who's taking control. Just because Asia is having good economic news doesn't mean Europe will. Just because Europe's economic news is poor doesn't mean ours is really great. So when we start looking at these different newses that come out around the world, we want to see what they're doing to their markets, because if their equity markets are moving higher, of course, it'll push our stocks up as well. If their equity markets are moving lower, it'll push ours down as well. So we do want to see how each of these individual segments work. The Asian segment is actually the longest segment. You'll notice it's literally 12 hours long from 3:30 p.m. Central Time all the way to 3:30 a.m. Central Time. Now Europe actually opens up at 2 a.m. Central Time. However, we get a lot of economic news out of Europe between 3 and 4 o'clock in the morning Central Time, and so quite simply want to see how that economic news starts moving the market. Remember, news is market food, and if it's good news, it should push it higher. Bad news, it should push it lower. So we want to kind of see how they start trading from this 3:30 up until 8:30 in the morning. At 8:30 in the morning, again Central Time, the U.S. market opens. Now Europe is still open and trading during our first 2 hours of our market. Hence we kind of gave it its own time segment, because we have 2 parts of the world open and trading during that time. They'll shut down. We'll go to lunch. Once we get back from lunch, we'll start looking at the afternoon market, which is just the Americas open and trading then, the North, Central, South America. And we'll actually close out the trading day at 3:15, only to take a very, very short break, and 15 minutes later start trading tomorrow's market all over again. This is kind of a picture of the Dow. It's a 30-minute chart of just a 24-hour day. This is that we'll call this the first 30 minutes of the whole 24-hour market, but it's the first 30 minutes of this Asian market. And I think this big old bar is in here. I think this was Apple's earnings or something like that. That's why it's so big. But we'll call this a reference bar, if you will. And this is actually reference bar number 1. And of course we have the Asian segment here, and you'll notice that the Asian segment even started selling off down through here until we got into the European segment. And this is that reference bar number 2, if you will, that another blue bar right there. But this is the European segment. You'll kind of see where they started kind of pushing things back up here throughout Europe. And then we got into our morning segment here in the United States. This is what we'll look at as far as reference bar 3 here. And all of a sudden you'll notice they started kind of pushing things back down again, only to get to the afternoon segment here. They started pushing things back up. So we had a down Asia, an up Europe, a down morning segment, and then an up afternoon segment. So it's kind of a way of just kind of dividing out our 24-hour day up into 4 separate time segments, so that we can actually get a better feel for who's taking control of the market and the direction that they're actually trying to move in. The key numbers on the Dow, when we start looking at support and resistance, you'll notice the Dow likes to trade in 25-point ranges. And quite simply, it's the century mark. Maybe it's 13,100, which we'll call 13100, to 25, 131.25, to 50, 131.50, and then to 75, 131.75. Of course, we get back to the century mark again. It's kind of interesting on the Mini-Dow. There's actually a kind of a noise zone, if you will, about plus or minus 5 points off of each one of these. So you'll look at somewhere between 20 and 30 being some support or resistance in there. 45, 55, 70 to 80, if you will, 90, 95 to 05, something like that. But you'll notice there's kind of a little noise zone as it kind of gets around here. Remember, it is electronic, so it'll kind of play around these numbers a little bit. But you'll notice there's a lot of support and resistance at these 25-point levels. And in fact, let me just kind of show you something here. This is a day in trading, once again, and I actually threw in horizontal blue lines every 25 points. Just chunk them on here. This is 131.25, 13100, 131.75, so on and so forth. And it's kind of interesting. You'll see this is a 30-minute chart, and you'll notice that here's one of those blue bars here, went up and just tagged that 13100, started moving down. And then we started kind of breaking here, and they kind of moved on down and through here, and they bounced off of this one, came down and hit this one, hit it again, bounced back up, had a hard time getting above here, finally shot up, and then here they go again, kind of holding around in here and kind of settling right along in here, kind of moving back up, little resistance again, and then they kind of hung around in this little spot. This is our day market here. They came down and tagged the 70-75 area, kind of moving back up and kind of settling around this 75-80 zone, then back down into 50-55. But it's not, I mean, they don't nail it dead on, but they are pretty close. But you kind of see that they'll kind of have those little sponge ranges around each one of those little 25-point number areas. So if you're watching the Dow, always kind of beware of where those little 25-point ranges are. So once we kind of figure out where support and resistance is, we then start looking at where our buy and sell numbers are. Just because they like to hang on those zeros or fives, 50, 75 century mark, don't trade on the zeros or fives. Get 1 point off of them. In other words, if you're going to go long, get long above the 0 or the 5, which would be at a 1 or a 6, right? And get above 0, it's 1. Get above 5, it's 6. Or if you're going to be getting short, get below the 0 or the 5. The number below 5 is 4, and the number below 0 is 9. So buy at 6s and 1s, sell at 4s and 9s, and that basically is saying at 6s and 1s is you buy it at 61, buy it at 66, buy it at 81, buy it at 86, so on and so forth. Sell at 39 or 34 or 19 or 14, but buy at 6s and 1s and sells at 4s and 9s. You'll notice that those 5s and 0s will just kind of get stuck on each other. But beware of those key numbers. Make sure you don't trade around those key numbers and those little ranges, that plus and minus 5-point range around there. Just make sure you get away from there before you start buying and selling. It'll have a lot of support and resistance in there. And in fact, if you kind of look at how this was working here, here's a Dow trade right after 9 o'clock in the morning. You'll notice that the high, the open, high, and low and close here, you had an open at 84, which is where the horizontal blue line is. You had a high of 13100 and a low of 13070. You see that? So they ran right up and tagged that century mark, and they came down, and they're right in that little noise zone, 5 points either side of that 75 area. So once we got below here, you notice they kind of came down, bounced back up, and then they opened, kind of perked up a little bit here. And then once they finally broke below that 70 zone here, which is that opening 30-minute range of our US day market here, and then they started kind of selling off. And they came down pretty quickly, kind of bounced off the 25 to 30 area, rallied back up to right around 50, and then pulled back down again. We're right down here at this 11300 zone. And then they came down to, well, look at that, 75 was the low down here, actually 74. Kind of pulled back up right around in here and kind of ended the day right around 25. So we can use those little 25-point ranges when we're looking to buy and sell to say, well, if we're getting short below one 25-point number, it should go down to the next 25 points. So if it gets below that 70 to 80 area, I ought to go down to that 55 to 45 area. And if it gets below the 55-45 area, it ought to go down to the 20 to 30 area. Below there, it ought to go down there and start playing with that little century mark. So we can use these as profit targets. We can use them also for our protective stops. We get above one range, stop goes below, at least below that range. In other words, if we get long at let's say at 31, which is around 25 there, we get long at 31, closest we can put the stop is at 19, but you want to stick it down at 94 or 89 or something like that if you're looking for a longer term trade. But we can use these numbers to kind of help us out in all that we're doing throughout the day when watching this Mini-Dow, just kind of keeping our eye on those little 25-point ranges. So it's really pretty cool. If you have any questions, feel free to call us here at DTI at 800-745-7444. Hopefully this was educational, and if you want to know anything else about the Mini-Dow or S&P or the NASDAQ, feel free to give us a call. We'd be more happy to help you out. Thank you very much.